Hey everybody, welcome back to AskAVC. My name is Ryan Floyd. I'm a partner at Storm Ventures. And one of the questions I'm often asked is what's the difference between angel investors and venture investors? There's three main differences: speed, check size, and strategy. But before I go into those, I want to define an angel investor versus a venture investor. And the biggest difference between the two, and I think it drives a lot of the differences in terms of their strategy, is whether or not you're investing your own money or you're investing other people's money. In the case of venture investors, I'm managing a fund. I've taken a lot of money from LPs and I'm investing that on their behalf and trying to drive a return. In the case of angel investors, most of the time, they're investing out of their bank account. Sometimes they're working as a group in a collaboration, but it's usually their decision as to whether or not they invest. And they're really not accountable to anybody else other than their spouse or their partner in terms of that financial decision. And I think that drives fundamentally a lot of the differences in the strategy. So let's first talk about check size. So because an angel investor is investing out of their own bank account, generally checks tend to be a bit smaller. In my experience, angel investors tend to be investing $10,000 to $100,000 per investment. Obviously, that depends on the angel investor. A venture investor, on the other hand, generally is going to be investing a bit more money because they're managing a fund. And that fund is going to have a certain size in order to support the team and the economics of a fund. And it's just really hard to manage a lot of very small checks. Now, what does that mean to you as a founder? That means if you're raising $250,000, raising from a venture fund might be tricky because they may not be interested in investing that small amount of money. An angel investor in that case might be a much better target. The flip side of that is if you're trying to raise $5 million, $50,000 checks is going to be very tough because it's just going to take a lot of them to get to the number you want to get to. The second difference is strategy. So angel investors tend to focus on either individuals and people that they know, founders they know, or markets they're very familiar with. And that's understandable, because it's not their day job, right? They're usually very focused on their job doing whatever they're doing. And so they want to be investing in people or markets they understand because venture is a very risky business. Venture investors, on the other hand, are investing in entrepreneurs all the time that they've never met before. That's certainly true in Storm's case. And we're investing in businesses that we're not super familiar with the markets either. What we're very confident about is two things. In the case of Storm, at least. One is B2B SaaS, and the second is go-to-market and how to make companies successful. So our strategy dictates a lot of what our initial investments then will look like as a result. So it's important to understand the difference between what an angel investor is looking for and a venture investor is looking for in terms of their strategy for you as a founder in terms of what you want to target. The last difference that I think is really substantial is speed. Because an angel investor is investing out of their own bank account, they're able to make investment decisions very quickly, often in a single meeting. A venture investor, on the other hand, is going to have to do some work. I'll tell you, at Storm, there's no investment decision that we make without anyone on the team doing any work. That would not get off first base. Part of it is because we're a team and we all push each other very hard in terms of trying to understand the relative merits of any investment that we make. And part of it is because we're managing other people's money and we need to do our work. So understanding relative speed is also important as a founder, I think, in understanding the difference between angel and venture investing. I also want to hit on a couple of myths. I think often people say one difference between angel investing and venture investing is the value that a venture investor can bring. And I'll tell you, I think that's garbage. Often, angel investors are fantastic advisors to businesses, and venture investors are duds. And sometimes venture investors are fantastic, and angel investors don't even return your emails. So it completely depends on the folks that you work with. But to make some kind of blanket statement that one's better than the other, it's ridiculous. Some of the best co-investors that I've worked with over the last 20 years have been angel investors who devoted the time, who've been committed to the companies that they've invested in. And likewise, I'll tell you, there's some angel investors I've worked with over the years that have been terrible, who have put in money and then have just been obstacles. But the same is true on the venture side. You might think because a venture investor, their job is to invest and their career depends on your success, you might think that they're going to be the best. Sometimes that's true, but not always. So there really is no substitute for knowing your investors. And I guess that's the point of the video. Know your investors, know who's putting money into your company, know that they have your best interests at heart, and things probably will work out. I appreciate you watching. Please subscribe, hit the like button, send me your suggestions on new videos, new things you'd like to hear about. And until next time, thanks a ton.